Hello and welcome to Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we will talk about Protalix BioTherapeutics Incorporated, ticker name PLX. Well, we can see that PLX today made minus 4.74%, finishing at 583. After hours were slightly lower at 580, but in general it's within, let's say, volatility ranges, so nothing really special. Although you could see 2 days in a row we have major kind of decline of the wave that started to form by, let's say, 6 days ago, and now this wave is finished. Today at the lower level we went to almost 548, which is the moving average 20 at the current moment, so still kind of confirming the general uptrend, but we already can see that 2 days the volume is increasing on decline, and it looks like we are about to go a little bit lower because there is this very strong point here sitting at 7, slightly 7 plus, that was formed around 10-11 of February, and this actually works as a kind of forming kind of a resist level here, because what is happening is that this height, let's say, this level looks like it is about to indicate the top, and even more it might be at the beginning of the descending resist level, which might be also formed yesterday or reconfirmed yesterday. And if this is indeed the case, this might mean that we are about to have another, let's say, corrective wave here. If confirmed, we will see it by tomorrow's action. If confirmed, then if we pierce lower, especially lower than moving average 50, it would mean that we are really going to go lower. And if you would ask yourself, well, what would be the higher level, the best level to buy through, you could say this is kind of a triangle formation, although not classical triangle. It is actually a decline line and upwards trend, let's name it T1, that was forming there already a long time, starting from actually mid of December of previous year. And this will work as a very strong support line, at least for rebounds, and therefore the best way to trade here, the best way to buy through would start in that vicinity. Another parameters that are saying that we could indeed go, and it's not that we most probably will have a fast rebounds, is MACD histogram. If you look here, you can see that it's making kind of head and shoulders, although this term is not completely applicable for MACD, it's just to explain the shape. And it's actually 3 waves. The first wave was small, the second one finished by topping by mid of April was bigger, and then the smaller one now you see 2 days ago it was topping again, so now it's declining. Most probably we will go to lower level, and this would mean a further decline. So if you look here a little bit at the magnification, you can see that for this stock there is a very principal level of trade, which is here between 338 and 401. This is kind of a general level. If we go there, this would be really like complete buy, full buy in full speed, but it's not yet given that we go there. So first level to buy through will be, as I said at the beginning, at the vicinity of T1, and actually just higher here at that level, F5, let's say 24. So if you would speak of levels, this is the first level to buy in, which will be 478, and actually the higher one is 524. So let's write it for ourselves as a call out. So first call out to buy, 476 and 524. What does it mean, first call out to buy? You will see it a little bit later as well. It's part of our buying and selling strategy that is discussed at this channel. It's so-called mixed analysis, where we do 3 in 1. So first is technical analysis. That's what we did at the beginning to understand most probable pattern forming. Second one is actually discussing how to buy with non-linear averaging down through the resist support levels or channels. And the third one is risk mitigation due to possible negative catalysts kicking in, if any. So now we discussed first one. The most probable way of trading would be to buy this first channel and then rebounds with the price. making profit. And speaking of profit, we always advise take profit from actually 10 to 15 profit margin. We advise from 10 to 15%. Once you have it from the money allocated in the position, really take it, because the profit taken is taken indeed, meaning that until you press the sell button, you don't have the profit. So take it, re-enter if needed, or check other opportunities. You can also find many, even at our channel. There are videos even up to 5 weeks ago placed. They are still fresh, meaning that the situation discussed there could be just happening. So you will be right in time to buy and make some profit there as well. So this is the first, let's say, pattern, the first most expected one. But also what might happen, of course, we could decline further, and the T1 trend could be broken. This would mean that actually R1 will work as a very strong resist, sending the price even lower. And if this is the case, R1 will work both as a resist and a attractor, meaning that when the price will be in the vicinity of it, it will work as a resist. When the price will be much lower than it will work as a tractor. Especially if it will pierce T1 line, we can anticipate next level to buy through, and this would be actually here below 437, and by that moment moving average 200, the red line will be almost on top of it, near to 437, making it actually a very nice double support. So it will be the line between 401 and 437. Why this? Because as we mentioned at the beginning, 401 is a very principal, top of the very principal trading channel that was seen from let's say autumn previous year to December and November. So anything on top of it will work as a strong rebounds, and therefore we can make our second call out here, those levels to buy, and this will be then the second level, meaning this is the level to mitigate technical risks. So if the first pattern is not working, then it's a formation of second one where you can have a rebound there and buy through again. And the last one, the last level that we always discuss at our channel, this is the level to have a risk mitigation due to negative catalyst. A negative catalyst could be anything from just negative news related particularly to the company, or just in general negativity on the market, or something global, like we know this famous example of COVID, when April 2020 and 2019 actually we had those declines. But now if you look here carefully again, here you see this is the famous COVID decline. So something like that we need to mitigate, and of course it's not expected to have again something like this. Most probably, even if we have any negative catalyst, we just should be a little bit lower than the level 338, and this one actually the very principal level also seen here, this would be 313. So 313, 338 will be actually the last level, and this would be really risk mitigation due to negative catalyst kicking in. So let's put it as a indicator for us and return to previous scales of magnification. So now we see the three levels. First one is the most probable technical situation that might play. Second one is risk mitigation if the current technical pattern is neglected, and the third one is actually risk mitigation due to possible negative catalyst, if any. So with this being said, we also remember that we do buy non-linearly. What does it mean? It means that through the channels, once the price is developing, you buy in a such way, at least according to our advice, that you can split money you are willing to play here in 5 portions. Then you can buy with first portion through the first channel. If the price declines to the second channel, you can buy with another 2 portions through the second channel. Buying through means that you start buying at the top channel and slowly enter, such a way that you try to finish your buying in a way that your average price within the channel is just in the middle of it. So once the rebound takes place, you can make the most profit there. And then remaining 2 portions you keep to average down if any negative catalyst kicks in. So this way, while others will be exiting with losses, you will be just buying and preparing to make a major profit, because we don't discuss stop losses. We don't discuss very quick trade strategies when you take your loss and you go for another opportunity. We think still within the daily trading approach, you might spend a couple of days extra, but still buy through non-linearly and exit with a profit, and in the worst case, just with a draw or with a minor, let's say, losses, which should be in the range of just the taxes that you pay for buying and selling your position. So this way we tune for time and profit rather than let's say speed and profit, which is usually case for those who take stop losses. So with this being said, that's the situation for PLX. Good luck with it. Don't forget to subscribe to our channel if you're first time watching this video. This way you will not miss our new videos and new interesting discussions for US-based stocks.